Hello, everyone. Welcome to People Notes. My name is Michael Kirkchin, and today is Monday, June 27, 2022, and welcome to my channel. The topic for this evening is going to be a very important one, I find, with Bitcoin's price behavior in recent weeks. I like to compare it to what was going on in 2018. It was a very similar behavior in 2018 as well, where, again, it was a bear market. The S&P was down, the Nasdaq was down. The DXY, which is the US dollar, was also having a bull run. And the Federal Reserve also was increasing the interest rates, yet the US Treasuries, the 10-year and 2-year Treasuries, didn't behave the same way in 2018 as we did now. And that kind of marked the bottom of Bitcoin when the US Treasuries and the 10 and 2-year Treasuries were not behaving in a manner that they are behaving right now. So let me show you the differences, and with the charts, we'll explain to you exactly what I mean. I believe that Bitcoin's bottom may be happening if and only if the US 10 and 2-year Treasuries start their move back downwards from the current positions. Before I get started, please, full disclaimer as always, this is not financial advice. I'm not a financial advisor. I'm just an investor in this space, and I'm sharing with you my opinions. So let's get started by looking at the screen and looking at the charts, and I'll be able to explain better with the charts. Let's do a quick recap. What was 2018 like for the Nasdaq? Well, 2018 for Nasdaq was very interesting. Again, here was Nasdaq before the year started around end of 2017. It was around 6,865 points, and then afterwards it got up to something around range of 8,000 points in August 2018, and then there was this correction down to 6,400 points. So basically there was this drop of 20-30%, and then afterwards it recovered and continued its up move. What was the S&P doing at the same time period? The S&P at the same time period, let's open up the S&P chart. Here we go, it's right over here. And the S&P at the same time period, if you look at 2018, where was it at? Well, again, October 2017, around 2,600 points. In February, is around 2,700 points. In around the period of September, it was around 2,864. Then it went down to 2,440 points, so a good drop of around 10-15%. And then afterwards, it started going back up towards its bull market. So that's where the S&P was. What was going on with the DXY, which is the US dollar index? In 2018, the US dollar index was basically at 2017. It was the US dollar was getting weaker and weaker. And then here it is basically at the beginning of 2018, something in the range around 91 points. It went down to as low as 88, 89. And then it started getting stronger and stronger, eventually going all the way up to May of 2020. But you're going to see that the US dollar behavior was kind of irrelevant for Bitcoin. And you see that eventually when I bring the Bitcoin chart. And what was going on with the Federal Reserve? Well, the Fed funds rate in 2018, here it was over here in September of 2017, it was at around 1.20 points. And then the Federal Reserve was increasing the rates all the way to 2.39 until December 2018. And then it stayed at this place, didn't move until July of 2019. Then it started going back down again. Now, the key thing to note for this was what's going on with the US 2-year bonds and the 10-year bonds. The US 10-year bonds at February of August 2017, October 2017, right? You see it's increasing all the way up to 2.86%. And after October, it started going down. What was going on with the 10-year bonds? If you look at the 10-year bonds, the US 10-year bonds in August of 2017, it was around 2.10%. It went up all the way up to 3% in November. And then afterwards, it started going back down again, right? And the key thing to look at when we're observing this was that US inflation rate was under control. In 2018, where was the US inflation rate? Well, you see in 2016, 17, it was here in the range of approximately 1.82%. At the high, it went up to, in June, it was at 2.94%. And then afterwards, in the month of March onwards, I mean, it never went higher than something in the range of 2.73% approximately, right? And that was in August 2018, right? So this is the key thing to observe, because there wasn't that same hype that we're seeing today with the U.S. Federal Reserve panicking about the inflation rate and so forth, and creating this hysteria in the 10-year and 2-year treasuries. Now, what was Bitcoin doing at this time period? I will open up the Bitcoin chart and we'll see what's going on in these time periods. So as the year 2017 ended, Bitcoin was at its all-time high at the time, which is approximately the range of $20,000 US. Coincidentally, we're at the same price point today. But basically back then, at this December 2017 mark, Bitcoin was at approximately $20,000 US. And then the whole year, Bitcoin went down, right? So basically it went down all the way. So it went from $20,000 US all the way down to $6,600 US. This was going to be basically at the range of approximately time-wise, it was approximately November 2018. So basically Bitcoin had gone down quite a bit. I mean, we're talking about, to go from $20,000 US all the way down to $6,000 US, Bitcoin had lost basically $14,000 US. So percentage-wise, that would have been that it had lost 70% of its value. So 70% of its value lost, and it didn't stop there. From then on, it actually went even more lower, because it got down to as low as around $3,000 US, right? So that means Bitcoin had lost 85% of its value going from December 2017 all the way down to somewhere around here, which was at December 2018. Now, from this point onwards, this is when we saw all of a sudden Bitcoin doing higher moves, right? So basically over here, all of a sudden we had its first bump up to around $2,400 US. Then it went up to this $5,200, and it kept on going this parabolic run until something in the range of $12,000 US in July. And then that's when Bitcoin had started another bear cycle, going down all the way down to $5,000 US, which was around 2019, 2020. But what was the key thing over here for this parabolic run? So this would have been really a local bottom for Bitcoin at the range of something in the range of around $3,000 US. Now, what happened to the other indicators? Was there anything else going on with the US dollar or with interest rates or Federal Reserve that really gave us this push to go from something in the range of $2,000 US all the way up to $11,000, $12,000 US? And we can observe that the key thing was really it wasn't really didn't have much to do with the DXY, because if we look at this period of December 2018 until July of 2019, what's going on with the US dollar? Well, the US dollar wasn't really helping Bitcoin, because you see in October, November, the US dollar was here. It actually got stronger until all the way from December 2018 onwards. The US dollar was actually getting stronger, meaning that it wasn't really helping Bitcoin. It was actually working against Bitcoin. Yet this had no impact to Bitcoin's price. And if we look at what's going on with the inflation, as we observed earlier, the inflation wasn't really dramatic, because in the inflation rate in the US in the range of August till September until December 2018, it was in this range of a plus or minus 2%, and until July, until really January 2020, it was hovering at this range of around, again, plus or minus 2-3%. It never got anything catastrophic. And let's see what's going on with the US Fed fund rate. The Fed fund rate, it was right over here. So in June 2017, it was here, as we observed earlier. In December, it was at the range of approximately 2.30%. Now, this is a key thing. The US Fed fund rate didn't go higher than this. So basically, this is where it stayed. So for the next few quarters, the Fed fund rate wasn't budging. It was staying around 2.30%. And if you look at what's going on with the 2-year bonds, or the interest rate for the 2-year government bonds, from December 2018 until that July 2019, the US 2-year bonds were actually going lower. So even though the Fed fund rate was really staying the same, the 2-year bonds were going lower, meaning that the market was anticipating that the Federal Reserve was going to be lowering its Fed fund rate. And obviously the market was right, because we observed that that's what happened afterwards. The Fed fund rate actually did drop significantly, went down from 2.3% all the way down to almost 0%. So meaning that the market already caught this way before, and they kind of priced the US 2-year bonds at a decreasing pattern. And then if you look at the 10-year bonds for the United States, so you see that basically the US government 10-year bonds at the same time period from December 2018 until June, July 2019, it was also decreasing. So it was going down from 3.16% all the way down to something in the range of 1.66%, almost down by 40%. Now, if we bring this to today, we observe that today the inflation obviously is catastrophic. Federal Reserve is panicking about this as well, and it's at above 8%. What's going on with the US Fed fund rate? Well, the Fed fund rate is nowhere close to where it was back then. Back then in 2018, 2018, it was all the way up to 2.40%. Today, we're at 1.75%. This chart by TradingView is off. The real numbers are now 1.75%. So the Fed fund rate is 1.75%. Yet if you look at what's going on with the US 2-year bonds, the 2-year bonds are at record highs. Really, they're at numbers that we haven't seen. Today, it's at 3.09%. It hasn't been this high really since 2007. So this is a record high compared to where it should have been. So since it hasn't been this high since 2007, and look at what's going on with the 10-year treasuries. 10-year treasuries today are at above 3% as well. So they're almost at the same rate as interest rate as what the 2-year bonds are. So this really, it seems to mean that the market may have potentially overshot with its interest rates. And that being said, and we see clearly as you watch the rate of change over here, we see this rate of change hasn't been this high since really the 1980s for the 2-year bonds. And if you look at what's going on with the 10-year bonds, we observe that again, the 10-year bonds also, the rate of change hasn't been this significant since in the last 40 years. So that being said, I believe that in order for us to be able to see a real proper bottom for Bitcoin in this market, we would have to see the 10-year and the 2-year bonds do down moves. And until we see that, I believe they're going to be working against us, and they're going to be working in this entire cryptocurrency space, or probably also against this entire stock market as well. By them being so high, they're making it so that for the investors, it makes more sense for them to be invested in bonds versus crypto or the stock market, which is not helping in getting these really capital coming to our space. So hope you enjoyed this video, and I look forward to hearing any comments regarding your feedback about this. Thanks so much for watching, everyone.